Wealthi Experts, where we are bringing on experts in their field to help us build effectively a wealthy life.
Welcome everybody to another Wealthi podcast. Today we're sitting with Alan Liao from Avari Capital Partners. And this is an interesting story today. Alan has built a very significant business, just over $1 billion in assets under management in 6 short years. This is not something that, the average anybody can do. So I'm very, very glad to get Alan on the show to talk about himself, the types of deals that he's been doing, how he sees wealth in ways that we can also build a wealthier life. So Alan, I know that you're a busy man. Thank you for joining us today. A lot of the people that are watching and listening don't know this, but in the background, you've got basically a white wall, but you're in your office. It's a spectacular view. It's a shame that we can't watch it and without the line all screwing up.
Yes. Yeah.
Alan, I did give you a quick intro there. How does someone create a business like you have? And in the 6 short years, how did you get to where you are today?
Yeah, sure. So I started my career on the proprietary trading desk in the investment bank. So I did about sort of 5-6 years, just basically trading all kinds of asset classes. So including the stock market, fixed income, currencies, commodities. So basically everything. And then after a few years, there was a US legislation basically prohibiting all the US banks from trading their own equity or their balance sheet. So that kind of forced us and all our colleagues out from the banking system. But what's really interesting is during that time that we kind of realized Australian property market probably has one of the best risk reward metrics among basically any asset classes. When we're doing any sort of the other investments or the trading, that we're gonna face some sort of the losing situation at one time. For example, when we're trading the currencies, that we probably have the win to lose ratio is probably 55 to 45. So which means just slightly under half of the time that we're losing money. But if we invest correctly in the property market, it's actually really, really difficult to lose money in the property market. So Avari been around for about 6-7 years, and we had about 50 odds of investment, never ever had a losing trade. And not really because, well, partially because we do our due diligence and the research, but also partially because of if we buy well in the prime locations at a reasonable price, it's actually really difficult to lose money in the property market. So on that basis, I got into the property industry. I did a number of residential developments myself, and after completing about 5 or 6 projects, I felt okay, probably learned both sides of trade. On one side, it was the investment side. On the other side, it was the construction, property, and the commercial or logistics.
Finance
properties, right? So and the finance side as well. So at the time I felt okay, the time is right to start my own business, and then we start Avari. Lucky enough, we had a lot of institutional support at the start of our journey, and quickly we built up to the size that we have.
There's a lot of things that I want to unpack in there. Firstly, I just want to ask, before I ask you the more in-depth questions, with all the knowledge that you have, with the financial backing, was there an element of fear? Is there still an element of trepidation when you were jumping out, starting your own business and doing these deals yourself?
I was probably doing larger deals in the bank anyway, right? So when I started, I was basically risking my own salary that I have collected from the past, and then we were doing very small projects, say for example 4 townhouses, and then just to then obviously try to build up based on the experience that we have. So starting own business is definitely very, very different experience. But on the investment side, I would say the same principle always applies. You buy things in its intrinsic value, try to add value to it, and then try to look for a good exit, right? So that same principle actually applies. Whether you're trading stocks or property or even foreign exchange or anything that you do, the same investment principle from, say, Warren Buffett, buy things in its intrinsic value still applies.
And the interesting thing that I really valued is that you look at the broad spectrum of investments. You essentially had everything to invest in at your fingertips. And you looked at the Australian property market and said, you really can't lose here. And what is it about the Australian market in particular that you saw that it's such a robust or strong market that you felt so confident to sort of throw your money in and dedicate your resources and time towards it?
No, I think there were several elements to it, right? So firstly, that I think one thing that I've got to correct myself is not just Australian property markets, like in most of the property market in the developed countries, it's very difficult to lose money. Blackstone, they've been around for 30, 40 years. Last time I heard is they never have a losing investment in the property division. So one thing about property is over time, it's probably one of the best inflation hedge in any asset classes. So over time, they always, and with population growth, with more urbanization, with people basically moving into the city, when you buy prime locations, not having huge amount of leverage on those properties, over time, they always go up. The only thing that kills the property investment is over leverage, right? So if we can take the leverage bit out of the investment, it's actually, over time, they always go up, right? So that's number one. Number two is when we invest in market like stock market, right? You're relying on the management of that company. So if we buy CBA shares, you rely on the board of directors, the whole management team, the whole system of the bank. But in the property that we have, or even when we do the private equity investment, that you still rely on the management. In the property industry, we can control the destiny. That's why at Avari, that most of the fund managers, they will outsource the property management, development management capability, the design capability to external firms. We bring all of those capability inside of Avari Capital Partners. So we still do our own developments. We still do all the refurb ourselves. And so basically throughout that process, we really control what the destiny is. And that will give us, so we're the manager ourselves. And then so really enable us to buy, look at the misprice, look at where things undervalued, and then really from the operational point of view, accessing, okay, the building is, the previous manager may not have managed the building so well. Is that something that we can fix? And the reality is 9 out of 10 times, it's not something that we can fix either, right? But one out of 10 times, maybe we see something, okay, we can actually fix it. And then that's the outperformance really derives from that process.
Right. So, and for the people that don't know much about Avari, I'd love to just chat a little bit about that. But the things that I understand about Avari is you do developments, you bring investors together, you buy underperforming assets, you add some value, you also do some lending as well. And it feels like you're a one-stop shop for property investment at a more commercial level.
Yes, we don't really label ourselves as a property investor, right? Because on the surface we are, right? Really deep inside, we are the investors that using Australian property market as an intermediary, right? So basically, you can invest in companies or you can invest in properties. The one thing good about property are two things very good about property. One is over time, they always go up in value, right? If you invest in a small company, they might have difficulties in running the business. So the value can potentially go to zero. It's very, very difficult for a piece of land to go to zero. Second, that we have the control of the destiny. We can control what the end goal is. right? So these are the reasons that we choose to invest in the property markets. So we still see ourselves as an investor, so more like a private equity play. We're not really asset collectors, like some of the big listed companies. They buy office buildings, they sit there for 10 years, they collecting the yield. For us, it's more about how can we see that piece of investment is underperforming? What can we do using our specialties and expertise? How can we make higher than market returns? How can we make the alpha return out of that piece of investment using our property skills, right? So that's probably a more accurate description of what we do. So basically, we look at all kinds of investment. And then when we look at those investments, it's really about, okay, what position make more sense? We can go buy the property, or we can give the developer some money for them to manage and for them to build that property, or we can lend them some money to do it through a structured deal. Obviously, the high risk we take and high return that will be demanding. So basically, that's the DNA of Avari. Is we look at all type of investment in the property space, and we find the best capital piece, whether it's equity, whether it's debt, to match our investment strategy.
It's a very, very interesting business. Now, the longer you look at it, the more you uncover and actually learn about real estate and how you approach it. The current market, it's a very interesting space that we're operating in. What are you seeing that's standing out to you? And so when you're looking at the market right now, what are the obvious factors to you that are impacting your decision-making, and how are you looking at the future and how people should be responding? What are you seeing in the market at the moment?
Always in the market is on one hand that we have the capital values going up because of the low interest rate environment in the globe. On the other hand, we probably have one of the toughest leasing market that we have seen the last decade, right? So on one hand, say for example, if we're talking about office space, the incentive that landlord has to offer, the downtime, the vacancy rate is actually a lot higher than the last 10 years. On one hand, on the other hand, the value of the properties keep going up because of the low interest rate, right? So this is definitely something that we need to be alert of. Not saying, or we're not suggesting by any means that property market is going to fall, but that means the stable income it will become harder and harder to get, right? So, and same as the industrial space, I know everyone's discussing the boom of the economy, which has resulted historically, when I start investing in the industrial space, we were still buying warehouses at the yield of 7 to 8%. Right now, if you have a long lease to a national tenant, they can go as low as 3%, right? So that has dramatic, while at the same time the rental hasn't grown in Sydney or Melbourne. So the rental growth, despite the capital have probably grown 100 to even 200%, the rental has probably gone up only 10%, right? So these are the things, what's really driving the underlying asset value should be the free cash flow it generates, whether it's a business, whether it's a piece of property, right? So this is definitely something that we, on our radar, that we be alert, that on one hand, rental growth hasn't really come true. On the other hand, the capital value has gone through the roof, right? So these are the things that we watch carefully in our daily market, which sort of dictates how we buy and invest in different property sectors as well.
That's interesting. So there's two, you're paying attention to the office market, commercial, and you're also paying attention to industrial. And the things that stood out to me is that the asset value, the prices are going up, but effectively the underlying asset really hasn't changed. Rental growth isn't there. Do you feel like we are going into a bit of a bubble or a boom? And do you anticipate there will be some kind of fall or crash in asset prices in the future?
We don't know. Like these things can last, these bubble type of thing, like even it's a bit hard to call it what is a bubble, what is not bubble, right? But these type of thing can last for years. And but which means that we're just going to be a little bit more careful that buying something at 3% and hoping this trend will continue. And I don't think this trend will just keep continuing, right? So if people's happy with just keep collecting the 3% over the next 10, 20 years, then that's probably an okay investment. But certainly, we're not anticipating, okay, if we buy an industrial warehouse at 3 or 4%, the cap rate is going to keep compressing, and which means the capital value is going to keep growing. Another thing that people probably pay too much attention is the profile of the tenant, the lease profile, right? So if it's got a strong lease, the property tend to trade at a very, very significant premium to something has a weaker tenancy profile. But people always forget, end of the day, we buy the land, we buy the property, right? Lease itself, so we always say there's 3 components. One is the land, the other is the property, the third component is the lease. Lease and property are actually depreciating assets. Over time, they go down in value. The only thing that really goes up in value is the land, right? So, and a lot of time that when investors buy properties, they pay too much attention on lease. I'm not saying that you shouldn't pay attention on lease, but lease isn't the only thing that dictates the value of that property, right? So a lot of time people forget about what's the underlying asset, what's the underlying property they're actually buying. And that's also dangerous from our point of view.
So with all of this in mind, where's the opportunity? What should we be looking at, or where do you see, holes in the market without giving away your trade secrets?
It's very hard to say, because what we do is we try to look at every single deals coming to the market. I think there's about 600 to 800 deals above $10 million in the Australian market each year. We try to look at every single deals in that space. And then we're trying to look at all the lending deals. So what we always do is we're constantly searching for misprice. So buy anything and hoping the market will go up strategy probably doesn't work anymore. That's why we become much more selective on buying things. And as a result, that we have been buying less in the last 2 years. And I think we have definitely ramped up the lending book because they're short duration. We're still getting very stable and strong incomes. And that's certainly an area that we have ramped up in our portfolio. In terms of the opportunities in the property market, we're still looking for misprices instead of, okay, we see a big trend and we're certainly looking to buy anything in that particular category. I think the time of that kind of strategy is already gone beyond us, and then we just need to be much more selective at this point of the cycle.
So it sounds like you're diversifying income streams by paying attention to lending, but then also being opportunistic in the investments that you're selecting rather than any major trends.
Yes, exactly.
And thank you for that analysis. It's good to hear this kind of top level breakdown. Now, I just want to ask some more sort of personal questions, because obviously you built this significant business, but it all comes from something quite personal to you.
Yes.
Now, how do you see wealth? How do you think about building a wealthy life? What does a wealthy life mean to you?
I think a wealthy life is really about you're free to do. You go to work not because you have to work. Right, and for me, that really means the financial freedom, right? So I'm not a big spender. So if I have my decent house, kids go to good schools, and I come to work because I want to come to work, that's all that matters to me.
It's great. I mean, that's a really well balanced way of looking at wealth, and it's funny because, I talk to so many people about this, and it doesn't matter what part of the economy they're sitting, there's very consistent flow through. And at a certain point, it doesn't matter how much money you accumulate, it really does become about time and your purpose and how you spend your time. So exactly. With that in mind, what's the one thing you could tell our audience so that they could go build a wealthier life? What's the one thing that they could do or change today, or one thing that you've lived by to help you build a wealthy life?
One thing we sort of witnessed through the journey is a lot of people, they spend a lot less time on making the financial investment decisions then they spend time on the online shopping, right? So people will say, people probably spend 2 hours on choosing what kind of handbag they'll buy, right? But in terms of selecting the financial product, selecting the financial advisor, picking the fund managers, picking the actual stocks, you can really hear a tip from a friend over a casual drinking session, and you decide to invest $10,000-$20,000 in a stock that you know nothing about, right? So this is probably the thing that most people make that mistakes on, right? And I think just really coming from the investment background, one thing I would say, well, every time we make an investment, we probably have gone through each investment we made, we have probably gone through at least 100 to even 200 opportunities. So that's the process. It's really about filtering out what's not for you, what kind of risk that you shouldn't be taking on, and then to come to an end decision about, okay, what you will invest in. We certainly don't invest in anything that comes to our desk. And then, in fact, we turn down 99% of the opportunity that come to our desk. So these are the real, I guess, yeah, for people to want to build that wealth. Then especially, I think in this market, building wealth means invest well. And that's the investment decision process, spending more time understanding product, understanding manager, understanding what you're actually investing in is very, very important. And also one thing is understanding what's the alternative options that you can invest in. I think these are the most important things. I think average or the normal people that should be focusing a lot more on.
It's a very good, clean, simple way of thinking about it. Spend more time thinking about your investments than thinking about spending your money. So exactly. How you can make more money than spending it. If you're spending more time about handbags and spending your cash, money's leaving your bank account rather than thinking about how you can go and invest. It's a very simple way of thinking about it.
Yes.
And, thank you for that. So, lastly, we do this part of the podcast where it's effectively leaning on the network. In Wealthy Experts, we have a bunch of people that come on and a lot of people that are watching. So the first question is, what's one thing that we can do or that you can do for the network? So what's one thing that you could do for all of us, the people that are watching, that are listening, that are paying attention? What's your one area of expertise, or what's one reason why we should reach out to you or Avari? What can you do for us?
I guess Avari is just a typical funds management company, right? So we help wealthy individuals or high net worth individuals to build their wealth. I probably wouldn't say that for someone who's just starting their life, my recommendation will still be buying a house. Don't invest in fund managers, don't invest in financial product, don't invest in Avari as product, but really focus on buying a house, buying a piece of land. One thing is very important, we always emphasize on is land is the asset that actually go up in value over time. So yeah, that's probably the advice that we'll give to people that already that's trying to start their life and building their wealth. When they come to a stage, they have their primary home or residential, they have a few investment here and there. Avari is a firm that we can potentially help them to build up the wealth, whether through our mortgage product, which is the mortgage fund that we run, the first mortgage fund that we run has a track record over 10% annual return each year. That's monthly distribution. Also, from time to time that we have our offering in the equity fund that we do. The equity fund has returned over about 20% per annum over the last 6 years that we have been around. So these are the products that can potentially help wealthy investors.
And what's the one thing that we can do to help you? I mean, you might be moving offices, buying a new car, or working on your golf game, whatever it is. What's something that's niggling you in your life currently that we can all do to help or assist you?
I think I have a pretty heavy life at the moment. So I think it's really, it's a time that we think, if it's something that we can help the audience and help people that we have, we're definitely willing to spend more time on. In terms of our life, we certainly, the business is growing. So I think, from my personal point of view, nothing to complain. So just, keep the trend up.
So, okay, so you don't really need any help. Everything's kind of bubbling away. And it sounds like if people are out there to reach out to Avari, if you're a developer, if you're looking to borrow money, lend money, if you're looking, there's a whole host of people.
Yes, then definitely, right? So we're always looking for deals. And one thing that we have, I guess the trouble that we have at the moment is there's more money than the deal flows, right? So we have to almost turn down a few applications in the fund each month, which hasn't been, that's definitely not something that we want to do. So really, from the developer point of view, if there's any good investment, very happy to look at them. If there's any developer that have funding needs, we definitely want to speak with them, and we can go the capacity we can go from maybe $2-3 million of investment.
That's awesome. So, I mean, really, the way that we can help you is just reach out with different deals and opportunities. You'll assess them, and hopefully there's something that our audience and you can do together.
Exactly. It's quite interesting that sometimes we do have our investors who invest in the fund and calling us and say, Alan, by the way, I've got this piece of land. Could you have a look at this piece of land and help us to say, okay, if there's anything, whether it's a JV, whether you can help us to develop them out. So we do get those opportunities coming to our desk, and these are sometimes the best deals because it cut out all the middle person, and then a lot of times through the structured deals, we can do it can be a win-win situation, which means we have a more protected return. On the other hand, the developer, the landowner approaching us end up getting a little bit higher than if they will have to sell in the open market, right? So these are the type of things that we love to talk to people about.
Awesome. Alan, thank you very much for your time today.
Thank you.
I've already taken up enough of it. For all of you that are watching, listening, that are paying attention to this far into the podcast, leave comments. Let us know if you disagree with anything that we've written or said, and things that you do agree, let us know. Share it with your friends. I really appreciate your time, Alan. You're a mountain of wisdom. It'd be great to catch up again soon and look at more of these deals that you're working on. And to all of you out there, have an awesome day, and we'll catch you in the next episode.